Employment numbers are out in the next hour and our business editor Ross Greenwood joins us. Ross, you'll be keeping a very close eye on these, as will the Reserve Bank. What will it be looking for?
You'd be looking for a fall, actually, at the moment, you'd have to imagine. That's what you'd really be looking for, the government as well. It is expected by economists to actually drop from around 6.4 to 6.3%, an extra 30,000 or so jobs created. But the reason why it's so important is, remember, this is the focus of the Reserve Bank. It wants to get the unemployment rate back under 5%. It wants to really create, if you like, pressure on wages for employers to pay more and, as a result, see inflation. And it would only be then that maybe interest rates would start to rise. The Reserve Bank, remember, has indicated that it will defend interest rates at the 2 and 3 year levels for up to 3 years to try and keep these rates as close to zero as it possibly can. So until it sees wages inflation, it's not going to be moving on interest rates.
Yeah, Dr. Lowe is almost promising that interest rates will be low till 2024. But does that mean the banks will keep mortgage rates as low as they are?
Oh, yeah, they will, absolutely, because remember, those banks generally fund their mortgages by short-term interest rates.
Yeah,
Some
right.
might be tempted to go slightly longer. The real worry is long-term interest rates. What you're seeing is that at the other end of the curve, 10-year interest rates here and in the United States are starting to rise. Money markets are worried that there will be an inflationary outbreak and that central banks, including our Reserve Bank, will have to eventually raise interest rates, potentially even quicker than what they would like to. And that is the danger in the strategy that they've got, with so much money sloshing around, with so much, if you like, incentive around the place. That's the big key right now, that people are trying to weigh up in the markets and certainly weigh up as individuals taking out mortgages.
Yep, it's certainly fueling the housing market, I tell you that much. But a separate survey out today we see shows that many public companies not only kept JobKeeper payments but also increased profit because of the government handouts.
Yes, so the company that's done this is a company called Ownership Matters, and this company normally advises big superannuation funds on how to vote at annual meetings. But in this particular case, what they've done is taken information that public companies were forced to report, and that was how much JobKeeper did they pick up. And it was significant, because what's happened here is you've actually got some 66 of the top 300 companies have taken JobKeeper, but of those, 58 reported positive earnings. And indeed, there's a whole range of these companies that reported earnings that were even better than what they'd reported prior to COVID occurring. And so now the question goes back onto the government as to whether it's structured JobKeeper well enough to try and stop these companies that were profiting from JobKeeper from doing so. Again, it's all about the design of JobKeeper and whether some companies have profited. As you know, some companies have been embarrassed enough to hand the money back, but many others have kept that money. And that's a really significant issue when perhaps, in many cases, they simply didn't need it.
It's a bit of a PR problem, but you can bet your bottom dollar that they won't be using robo-debt to get back any of those extra profits.
No, exactly. They won't be doing that.
No. Ross, before we let you go, what's happening in New Zealand? It's supposed to be this economic miracle, but its economy went backwards in December.
In the December quarter, it did indeed, and this was a bit of a surprise. Forecast said it would rise by 0.2%. It fell by 1%. Basically, international trade and also the Auckland lockdown really had a big impact on the New Zealand economy. Now, eventually, it will bounce back when they get the vaccines through enough of the economy and the borders open up. But that's the key for New Zealand right now. Far from being an economic miracle, we spoke about unemployment earlier on. Its unemployment rate currently 4.9% compared with ours at 6.4%. But the issue is that it's all about trade. And if they can't trade, the borders aren't open, then they're going to have real troubles getting this economy to grow anytime soon.
Makes sense, Ross. Absolutely. Thanks so much. Great to see you.
Good.